What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be covering in this update is some really important data on AMC that is increasing by about 1,700%. There is a very key piece of data here, this one data point that a lot of people have been looking at, and we are finally starting to see it do what we want it to do. Now, in addition to this, we are going to be taking a look at the full Ortex data for AMC and GME, the technicals on some of the longer time frames to give us an indication of where we could be headed over the next couple of trading days, because we are seeing some very interesting things on that 4-hour time frame right now that I think a lot of you guys are really going to like. We're going to be taking a look at the max pain for this week as well, and the potential for a gamma squeeze coming up as well, because this option chain is pretty loaded if we start to see price movements to the upside. Now, again, towards the end of the video, we are going to be doing a little bit of a conversation on how to trade the squeeze. Now, once we see these price movements to the upside, I know a lot of people are going to be buying and holding options. In this video, I'm going to try to break down at the end kind of a smart way to kind of trade an event like we are expecting to see on AMC here, so you guys are set up in the best possible way for when this event eventually ends up kicking off. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, guys, you have seen the amount of success that people have been having with the 1348 trading strategy. If you do want to get grandfathered in to all of those options data, the real-time options data that we are rolling out to you guys very soon, even more algorithms, over 40 private live streams every single month, the full stock market and options trading curriculum that we are about to release, and all of the alerts on over 450 stocks, make sure you check out that link down below. Prices will be going up next month in order to give you guys the best place to come and learn how to trade. So make sure you guys check that out, only if you are interested. Now, when we look at AMC here, it closed the day at $13.52. Very solid day today, up 3.44%. Now, taking a look at some of the longer time frames here, specifically the 4-hour, well, we are seeing some very interesting things. We saw this 1348 cross here on the 4-hour today. We saw the MACD flip towards the end of the day yesterday. So we are looking at some bullish momentum here. But again, we need to see some momentum above this 200 EMA to really show that continuation of a bullish move. The other thing that we have to think about here is that we are going to be receiving the CPI data on Friday, which the market was seemingly starting to price in today as Gary Gensler was speaking. And we are going to be getting Powell in the FOMC meeting next week, which we are most likely going to be receiving another 50 basis point rate hike. So those are kind of some things on the horizon that we have to look out for. Now, let's get into this 1,700% increase. When we're looking at AMC right here, we have 23.68% estimated short interest, 11.66% minimum cost to borrow, 28.58% average cost to borrow, with a max of 48.18%. That is pretty crazy. But what I want to take a bit of a note here is, what was the cost to borrow about a month ago? A month ago on AMC, the average cost to borrow was right around 1.77%, and that has since increased all the way up to around 30%, what we are seeing right now. That increase is very significant, because when you think about how the cost to borrow rates are enforced on the people that are taking these shares out on loan, they're what is called a variable rate, meaning that if an institution was trying to short shares back around May 9th, they were paying about 1.77% per year on the shares that they were taking out on loan against AMC. Now, that rate has skyrocketed to them on average to about 30%. Now, there's two kind of things that can happen here. One, if they were entering into new short positions at those lower levels, now they need the stock to go down even more in order for them to break even or be profitable on this trade. So that could be a sign for them to potentially get out. But what this also does is, let's say you're on the outside looking in, you're looking to short shares of AMC right now. Well, it's going to deter you from entering into that position or that trade if you're seeing these massive cost to borrow levels. Now, again, with the cost to borrow levels going up, it means there's less shares to go out on loan anyway. So it's possible that you see less selling pressure or less shorting pressure coming in as a result of this decrease in the shares that institutions are willing to lend, and this increase in cost to borrow, which these two things combined together, in my opinion, are a very, very good sign of things to come. Now, when we come over to GameStop over here, we have 27.44% estimated short interest, 122% or 112, percent average cost to borrow, and 222% max cost to borrow. GameStop's data right here and its technicals are both looking very, very, very solid as well. Now, I know a lot of you guys like to talk about this max pain concept, so I'll pull this up very briefly for you guys. The max pain for this week, $12.50 for AMC, meaning that the price with the most amount of puts and calls that are expiring worthless at zero is going to be at $12.50. So definitely something to keep a note of over there. Now, let's briefly talk about this gamma squeeze situation for AMC, because I know a lot of people have been asking about this, what I think about the potential for a gamma squeeze, and here it is right here. So for this week, we do have more calls in the money than puts, but not in a significant enough way for us to say, yes, we're going to see a lot of delta hedging from these market makers. Next week, though, we have more puts in the money by a significant amount than calls. This does provide a little bit of an opportunity, though, because if we start to see price increase, we see puts going out of the money, calls running in the money. So you see the puts getting unhedged, buying pressure. You see calls running in the money, more buying pressure. And we have 297,000 call contracts out of the money over here as well, which could lead to some significant buying pressure coming in. And again, guys, if it doesn't necessarily get that buying pressure that we want in the June monthly expiration period, well, July is already looking pretty wild as well, with 23,000 call contracts in the money and 343,000 call contracts out of the money, with a decent amount of puts that can run out of the money too. So things are looking pretty interesting here. But again, with gamma squeezes, it's an if this, then that statement. So we need to see that initial increase in price in order to see that delta hedging from market makers. Now, I want to briefly talk about strategy with you guys, because we are headed into pretty dangerous territory in terms of cost to borrow, short interest, crazy catalysts coming up left and right for AMC, GME in the overall market. And I know a lot of you guys are itching to get into options on AMC and GME. Me personally, I'm waiting to kind of get a confirmation of a move to the upside, a pretty significant move to the upside. But I do want to go over a brief example with you guys on a little bit of strategy if you are planning on holding call contracts when we start to see a massive run. And we do have a pretty solid example of a situation like this playing out from a couple of months ago. Now, when we take a look at this right here, this is kind of the run from 1290 all the way up to 34 before that halt. Now, looking at the chart here, remember, we like to trade with 1348, the blue line, the 13 EMA, the red line, the 48 EMA, the yellow line, the 200 EMA. Now, I do have the 25 moving average on here as well in green. It just typically serves as a buffer between the 13 and the 48. This isn't really necessary for the strategy, but let's continue. So what we see here, remember, you see this cross right here on the 13 and the 48. Awesome. That is going to signify you to a potential bullish move. And when we come back to what we are seeing here at the current time, very similar to what we're seeing yet again over here. Now, when we come up over here, we do like to see a confirmation of that bullish move that I was talking about in the beginning of this video. And these closing candles right here, this breakout and retest, are going to be that confirmation of that bullish move. So you're looking for these specific things when you're trying to enter into a call position. Now, let's just say you entered right around this $19 level and you ride it up all the way through this nonsense halt at 34 and it starts to come back down. The key to options here, guys, is not diamond handing options, because all options can and have the potential to expire worthless. For shares, you guys can do whatever you like, but options have that inherent risk that they can expire worthless. So I do want you guys to be very careful. We talk about the make it free strategy, where let's say your contracts are up over 100%. You can sell half of your position or a little bit less of your position. Make that position free, meaning take your initial investment back, maybe with some profit as well, and let the other part of it ride on the potential in kind of the hope that it would continue back to the upside after a retest. But let's just say you want to keep it simple here and basically just go by the strategy. once you see a closing candle on the 4-hour break this 13 EMA right here, it's probably time to potentially exit some of those options. Not shares. You can do whatever you want with your shares. I know a lot of people are really in this, including myself, for pretty substantial increases in price for our share positions, but this is just specifically talking about options. What this allows you to do is really avoid this giant move all the way down where your options contracts could potentially expire worthless, which is not what we want for anybody. We want everybody to be in here making money, having fun, and learning about the market. So if you guys do want a little bit more strategy like that, and a little bit more in depth, make sure you guys check out that link down below. You're going to get access to all of those live streams in our Discord with me, Gabe, and TMI. So that is also going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I will see you guys in the next video.